And joining us to break it down is Caleb Alimi, Chief Dealer, Providence Bank. Good afternoon, Caleb. It's good to have you on the show.
Good afternoon, Will. Thank you for having me.
I see you're sounding chirpy, so I believe the markets are looking good. Now, the T-bills auction was held yesterday, saw a total allotment of 638 billion naira when the DMO had offered about 500 billion naira. Could you break it down for us? What went down there yesterday?
Oh, interesting. The DMO, like you mentioned, offered about 500 billion, but we saw, appetites of over a trillion, especially on the long end of the paper, on the 1 year paper. There's a lot to unpack in that 1 year maturity. Why? Because there's also, comparable OMO auctions to the DMO auctions. What we find that the CBN does with the open market operation bills is to sort of regulate liquidity. And for that reason, those ones are slightly, they're significantly higher than what the DMO is actually offering. We have the 1 year paper. We saw it drop from the last stop rate of 19.63 to 19.56. Now, volume sold was also much better than the last auction. But the 91 day and the 182 days, remained stable at 18 and 18.5 respectively. We think that what we see is that the DMO continues to show appetite for not increasing interest rates. They want to borrow, but they want to borrow cheaply.
Okay, but speaking of borrowing cheaply and the yields and stop rate, you know that the 1 year paper, as well, I saw in the news that the 1 year paper is expected to have a yield of about 26%. Is that true? And is it now walking head to head with the current interest rate, which is about 27.5% right now?
Yes, what has happened is that the DMO continues to sort of like track inflation, and they don't want to go significantly above that inflation figure, right? And the yield on this one is around, just a minute, the yield on this one is around 24% actually. It's around 24%, so it's just a bit around inflation, and that's where they want to keep it.
Okay, so do we see higher yields in the near term? Because last time when it was held, this is the second consecutive time the CBN has held rates, but we saw after the first hold, interest rates are still going up. Do you still see the CBN? You mentioned that they're trying to borrow cheaply. Do you still see the CBN, the DMO, hiking rates just to get foreign investors to come buy into the markets?
The CBN may hike rates on its open market operations, but the DMO will not hike rates on the Nigerian Treasury bills, which is largely their own borrowing platform. So we don't expect DMO to raise rates. I think they're going to maintain 19.56. They've tried to keep it below 19.6 for about 4 auctions now, and I think it's going to remain at that handle.
Okay, so what the post MPC now, let's talk about that. What has been the reactions of investors or market players after the hold rate? Was it, it was in line with expectations, but what did you see in the market after the decision of the central bank?
So it's been absolutely, like you said, it was absolutely in line with the market expectation. So the reaction hasn't been too significant on the Treasury bill space. But what we've seen is on the bond market space. There's a bond auction next week on Monday, and there's a bit of anticipation that the hold is being interpreted as a dovish central bank. And then we're seeing a bit of demand coming to that bond space at the long end of the curve, the 50, the 2050 maturity, the 2049 maturity, the 2033 maturity, the 2035 maturity. We're seeing, investors come demand that because that hold sort of like was interpreted as a dovish language, so to say.
Thank you so much, Caleb Alimi, Chief Dealer, Providence Bank. Always good to have you.
Thank you, Will.